All right, picture this. You're kicking back on a beach somewhere, sipping something fruity, and not a single worry about money. That's the dream, right?
Ah, early retirement. Who doesn't love that idea?
Exactly. And, for a lot of us, the stock market could be that bridge to financial freedom, but it can feel kind of intimidating. Like, where do you even start?
Totally. It's a jungle out there. So many numbers, so much jargon.
Yeah, exactly. And look, we know you're not complete beginners, right? You know the difference between a stock and a bond, but we want to go deeper, beyond the basics.
Right, we're assuming you've got the 101 stuff down. This deep dive is about strategy, risk, building a portfolio that actually works for you.
So, no need to rehash all the definitions. We're all about equipping you to actually get out there, start making those smart decisions with your money.
Exactly. And maybe even, dip your toes into the market without feeling like you're going to drown.
Okay, so let's cut to the chase. Why even bother with the stock market? I mean, savings accounts, they're not exactly setting the world on fire, are they?
Nope, not even close. And that's where the stock market comes in. It's got this huge potential for growth that you just won't find in your typical savings account.
Okay, give me an example. Paint me a picture.
Okay, so let's say you've got $1,000,
Okay.
right? And you invest it, and it grows at an average of 7% a year, which is, pretty reasonable historically.
7%, not bad.
After 10 years, boom, your $1,000 is almost 2,000.
Whoa, doubled.
Exactly. And after
Mhm.
20 years, you're looking at almost $4,000.
That's the power of compounding they always talk about, huh?
Exactly. It's like money making more money.
Yeah.
It's pretty awesome. And that, my friend, is something your savings account just can't touch.
Okay, you've almost convinced me. But there's that little voice in my head saying, but what about the risk? Everybody's heard those stories about people losing it all in the market.
Oh, absolutely. There's definitely risk. It's not a magic money tree. But that's the whole point of this deep dive, right?
Yeah.
We're here to understand that risk, how to manage it, how to make smart decisions.
So we don't get burned.
Exactly. And that's what separates the successful investors from, well, the not so successful ones.
Okay, let's talk about the different types of stocks. I mean, there's common stock, preferred stock, growth stock, value stock. It's overwhelming.
It is a lot.
Yeah.
But think of it like building a superhero team, right? You need a mix of skills, different powers to cover all the bases.
Love that analogy.
Right. So you've got your growth stocks. These are like your high flyers, your companies that are growing super fast. Think Tesla, a younger Amazon. They're shooting for the stars, but, there's more risk involved.
Makes sense. Higher risk, higher reward.
Exactly. And then you got your value stocks. They're like the steady, reliable members of the team, the companies with a solid track record, maybe paying out dividends consistently.
Okay, so like the boring but dependable ones.
Yeah, think Coca-Cola, Johnson & Johnson. They might not double your money overnight, but they offer stability.
And a piece of the profits through those dividends.
You got?
Okay, so we're assembling our superhero team. What about ETFs, mutual funds, index funds? What are those all about?
Those are think of it as pre-made teams, bundles of stocks.
Okay, prepackaged for convenience.
Exactly. So let's say you want to invest in renewable energy, right? But you don't have the time to research every single solar panel company out there.
Yeah, who does?
Right. So you buy an ETF that focuses on renewable energy. Boom. You instantly have a stake in a bunch of companies in that sector.
Okay, so it's like instant diversification. I like it.
And then you've got index funds, which are similar. They track specific market indexes, like the S&P 500, for example.
So I could just ride the wave of the overall market.
Exactly, without having to pick individual stocks.
Okay, I gotta say, I'm feeling a little bit more confident already. But let's say I'm ready to jump in. Where do I even begin? Practically speaking, what are the steps?
All right, first things first, you need a brokerage account.
Like a bank account for stocks.
Pretty much. You can go old school with a traditional brokerage firm, or you can use one of the many apps out there.
Ooh, there are apps for that. That's cool.
Oh, yeah. Super user-friendly, very accessible. Shop around, find one that you're comfortable with.
Okay, I've got my brokerage account. I'm feeling like a Wall Street tycoon. How do I build my portfolio? What do I need to think about?
Remember our superhero team. We want balance.
Right, not everyone can be Superman.
Exactly. Diversification is key. You don't want all your eggs in one basket. Spread your investments across different companies, different industries, even different asset classes.
So if one area crashes and burns, it doesn't take everything else down with it.
Exactly. Now, figuring out the right mix, that's where your risk tolerance comes in.
Okay, how much risk am I comfortable with?
Exactly. Are you a thrill seeker? Do you like living on the edge?
Depends on the day.
Well, think about it with your investments, right? Do you want to go for those high growth, potentially explosive companies
Right.
like our friend Iron Man, always pushing the limits?
Yeah, that sounds kind of fun.
Or are you more cautious, looking for stability and steady returns, like Captain America, dependable, always there?
A little bit of both, maybe.
That's fine. Your risk tolerance will help you decide how to divide up your portfolio.
Okay, so I've got my diverse team assembled. What are some good strategies, especially for beginners like me?
Two classic strategies that work really well are buy and hold and dollar cost averaging.
All right, break those down for me.
Buy and hold is pretty self-explanatory. You find companies you believe in, you invest for the long haul, and you just ride out the market's ups and downs.
So I'm in it for the long game.
Exactly. Dollar cost averaging, on the other hand, it's like setting up a regular training routine. You invest a set amount of money at regular intervals no matter what the market's doing.
So like every month I put in X amount of dollars, boom, done.
You got it. And that way, you average out your purchase price over time. You're less affected by those market swings.
Okay, those sound pretty solid. But I know there are some traps out there too. What are some of the common mistakes beginners make?
The biggest one, honestly, emotional investing. Letting your fear or your greed control your decisions.
Easy to do.
Right. The market dips, you panic, you sell everything. But the thing is, the market goes up, it goes down, it's cyclical. And over time, it tends to trend upwards.
So like don't freak out when things get bumpy.
Exactly.
Mm,
Trying to time the market perfectly, it's almost impossible. And you often end up buying high and selling low, which is, well, the opposite of what you want.
right, buy low, sell high, that's the goal.
Exactly.
So what you're saying is patience is key. Don't expect to get rich quick.
Definitely. Slow and steady wins the race when it comes to investing.
And don't let those short-term fluctuations mess up your long-term goals.
Right. And remember, learning doesn't stop with this deep dive. Stay informed, keep learning about the market, specific companies. That's what separates the pros from the amateurs.
Okay, so we covered a lot today. We demystified the different stock types, talked about building a portfolio, avoiding those common pitfalls.
You're well on your way to becoming a savvy investor.
You're leaving this deep dive with a solid foundation for your stock market journey.
And remember, investing is not just about knowing stuff, it's also about your temperament.
Mhm.
Patience, discipline, continuous learning, those are your real superpowers.
So are you feeling inspired, ready to take action? Go open that brokerage account, even if it's with a small amount, and commit to learning more. And hey, if you want more deep dives like this one, make sure you subscribe. We've got lots more to explore.
There's a whole world of investing knowledge out there.
We'll be here to guide you through it.